Welcome to Kharoo channel. We are solving depreciation sum by WDV method, and in this video we are going to solve practical problem 1, that is on page number 246. Let's go through the sum. Question 1. Messrs Omkar Enterprise, Jargaon acquired a printing machine for rupees 75,000 on 1st October 15 and spent rupees 5,000 on its transport and installation. On 1st October 15, they purchased printing machine, let's say PM, and this is PM1, and they purchased at rupees 75,000 and have incurred incidental charges of transportation and installation. And as you know, as per accounting standard 10, we add all the expenses, incidental expenses, that is other expenses that were required to bring the asset in its working condition. So in this case 5,000 will be added to its cost of asset. Okay. Then another machine for rupees 45,000 was purchased on 1st January 2017. So 1st January 2017, plant and machinery 2 was purchased for 45,000. Okay, and depreciation is charged at a rate of 20% on written down value method on 31st March every year. And they've asked printing machine for first 4 years. So here we'll write WDV at the rate 20%, and we have to make printing machinery for 4 years. So we are starting from financial year 15-16. This is the transaction from 15-16. Then in 16-17 we have this second transaction, 16-17. Then in 17-18 and 18-19 there are no other transactions. There are no purchase or sales transaction. In the entire sum there are no sales transaction. So we will just need working note 1, that is calculation of depreciation. So with this summary, we will start with working note 1, calculation of depreciation, and the method is WDV at the rate 20%. There are two machineries, printing machine. So we will need particulars, printing machine 1, printing machine 2, and total depreciation. We will also need purchase date and purchase amount. First machine was purchased on 1st October 15 and second machine was purchased on 1st January 2017. 1st October 15, 1st January 17. First machine is of 75,000 plus 5,000, that is 80,000. 80,000, and second machinery is of 45,000. 45,000. So let's start with depreciation. Depreciation for FY 15-16. In first year machinery 2 was not there, so just first machine's working, 80,000 into 20%. And since the machine was purchased in between the year, that is on 1st October, so October, November, December, Jan, Feb, March, the machine was used for 6 months. 6 divided by 12, 80,000 into 20 will be 16,000, and 16,000 into half is 8,000. So the depreciation in 15-16 will be 8,000 total, and WDV will be 72,000. From that, depreciation for next year 16-17, since this is WDV method and the first asset was used for whole year, the calculation will be 72,000 into 20%, that is 14,400, and if that amount is reduced from 72,000, we get 57,600. The second machinery was purchased on 1st January 2017. So it was in the business for 3 months. So its working will be 45,000 into 20% into 3 divided by 12. 45,000 into 20% into 3 divided by 12. That is 2,250. This amount is reduced from 45,000. We will get WDV 42,750. 42,750. Correct? So the WDV as on 31,317 is 57,600 and 42,750 minus 57,600 is 1,350. 1,350. This is 72,000 and 14,400 plus 2,250 is 16,650. So less depreciation for 1780. We have to do this for 4 years, right? So the transactions are only in first and second year. For third and fourth year, the asset was used for whole year. Both the assets were used for the entire year. So the depreciation proportionate working is not required. We can just calculate 20% on these WDV value, right? So 57,600 into 20% is 11,520, and that amount is reduced from WDV. We will get 46,080 new WDV as on 31,318. Correct? And for second machine, 42,750 into 20% will give 8,550, 8,550. And for second machinery, 42,750 minus 8,550 will get 34,200. The total WDV will be 34,200 plus 46,080. That is 80,280. And the depreciation total will be 11,520 plus 8,550 will get 20,070. And in last year, depreciation for 1819, 46,080 into 20% will give 9216, and that amount, if we reduce from 46,080, will get 36,864. 36,864. 34,200 for next machine into 20% will give 6,840, and if we reduce that amount from opening WDV, will get 27,360. And if we add WDV of first machine to it, minus 36,864 will get 64,224, and total depreciation is 9216 plus 6840, 16,056. Here this is WDV as on 31/3/19. With this, our depreciation working is done, and now we can open the printing machinery account. So the sum is as printing machinery in the books of Omkar Enterprise Chalgaon. So in the books of Messrs. Omkar Enterprise Chalgaon, we are opening printing machine account. Printing machine. So let's start with printing machine 1. It was purchased on 1st October 2015 for 80,000. 1st October 15, printing machinery account debit to bank account. We have paid this amount through bank, 80,000. Then during the year there are no other purchase or sale entries, so we will pass depreciation entry at the year end. On 31st March 16, by depreciation. The entry is depreciation account debit to printing machinery account. So by depreciation to printing machinery account, right? The amount is 8,000 here, correct? 8,000. With this we can close the books. 80,000, 80,000. 80,000 minus 8,000, we will get 72,000 as per working. 31,316 by balance close down, and next day we will carry that amount forward, and next year on 1st April 16 to balance brought down 72,000, this amount here. Okay, so what are the entries in second year? Second year, again we have purchased second machine on 1st Jan 2017 for 45,000. So we'll have to pass entry for this purchase on 1st Jan 17. Printing machinery account will be debited to bank account for 45,000. So the purchase entries are done. No sell entry is there. So we can pass depreciation entry at the year end. 17 by depreciation account, that is 14,400 plus 2,250. So this will give us the total of 16,650, right? This amount 16,650. So the entries for second year is done. Now we can close the books. 72,000 plus 45,000 will give us 1,17,000. From that, depreciation amount 16,650 is reduced. We will get 1,350. 1,350. This is 117,000. So the closing balance is by balance close down 1,350, and that amount we will carry forward in next year 1st April 17 to balance brought down 1,350, and this amount matches with our working, right? This amount. So second year entries are done, and in third year and fourth year there are no purchase or sale entries. So we can directly pass depreciation entry at the year end and close the books. So on 31st March 18, by depreciation, the amount is 20,070. This amount. Let's close the books. 1,350. 1,350. From 1,350 minus 20070, we will get 80,280. So the closing balance is by balance closed down 80,280. We will carry this amount forward in next year 1st April 18 to balance brought down 80,280. This amount matches with our working. You can see that this amount 80,280, correct? And now the last year, fourth year, we have this depreciation amount at the year end 16,056. So on 31st March 19, by depreciation 16,056, and now we can close the books. 80,280, 80,280. 80,280 minus 16,056. In the working, we can see the balance is 64,224. So by balance closed down 64,224, and this amount we will carry forward in next year on 1st April 19 to balance brought down 64,224, correct? We have taken this amount from working note itself. So this is your printing machine account. So what did we do in this sum? First we summarized this sum, then did the working note 1 calculation of depreciation, and on the basis of that we opened printing machine account and did the posting for 4 years. for financial year 15-16, 16-17, 17-18 and 18-19. So this is your first practical problem as per WDV method in your exercise. That's it for the video. If you find this video useful, please like the video, share it with your friends and subscribe for future notifications.